We've been really interested in the volatility in equities, not reflected, though, in FX and Treasury market. How do you understand that when you look at the economy?
Well, I think the uncertainty is mainly policy-driven. We have day after day of shocks about what's going to happen to our trade policy. Larry Kudlow comes out to, cool nerves, calm nerves down, and then he must be looking around for what happened to the rug underneath him because it was pulled out by an announcement of looking at additional tariffs on China.
But do you feel like markets are appropriately pricing in what we should be looking at when it comes to trade?
I think markets really don't know how to price in the risk of a trade war. We don't know if we're at the beginning, the middle, or the end. So in that situation, we're facing, there's a difference between risk and uncertainty. You can quantify one. We're in a situation now where we really can't quantify what the ups and downs and the challenges are going to be.
What I found really interesting, though, is last time you were here, we were talking about the valuation in the market and how we are really overvalued. And I just want to put this into perspective and get your thoughts now. If you come inside the Bloomberg here, this is the price-to-earnings ratio for the S&P, and it's at 16 times. We haven't seen that since June of 2016. How do you feel about valuations now?
Well, last month, I told you I thought valuations were high, and then equities fell about 7–8%. I'm not going to go out on a limb again. It still seems to me that they're a little bit rich. I think it's going to depend a lot on what happens with growth going forward, what happens with profitability. I think we're at the late stage of a cycle where that's going to be a challenge. If we do see a pickup in wages, I think that's going to put further downward pressure on companies' earnings.
Alan, when we talk about markets pricing in uncertainty, different markets seem to be pricing it different ways. I mean, the equity market is really reacting day by day. Not so much, for example, debt. Is one wrong and one right, or is there some reason why they're pricing it in so differently?
I think they face different conditions. If you look at the debt markets, it's clear that debt is going to rise in the U.S. We're looking at trillion-dollar federal budget deficits going forward. So I think there's a little more certainty when it comes to debt markets, and the Fed has been clearer about what its policy is than we're seeing on the fiscal policy side or on the trade side.
But is it possible that might compensate for whatever uncertainty is priced in the bond market? I mean, normally you'd expect actually yields to go down, right? People will rush into bonds, buy more and more of them, they're uncertain. But if there's issuing more and more bonds, is there actually a counter effect?
That's probably why we've seen somewhat stable yields. I think that's probably right, that they're going in opposite directions. And then you'll also have, concerned about what's going on with the value of the dollar. Ordinarily, you would expect to see the dollar rising, yet it's been weakening. And I think that's also related to concerns about economic policy in the U.S.